What's up, guys? This is my attempt at showing you how I analyze the market and where I think it's headed on from here. So let's directly dive in, right? Let's figure out how this works. To begin with, what was really interesting for me was I was under the impression that this whole pattern working out was eventually going to be a flag and pole breakout, and we would, if not see an all-time high, probably we would retest the previous all-time high levels. But this whole idea broke down when this candle that you see, this exact candle was a bull trap, and also not necessarily a bull trap. If people were noticing, this was a previous all-time high, so we took resistance from there, but a lot of retailers probably went long at this candle. And in situations where a channel is measured, whenever it's a fake out, it falls really harsh, and this is exactly what we saw. And this wasn't surprising for me. The current move that we are facing right now wasn't really surprising, because if you check from the entire trend, right, on a daily, if you look at the entire trend, this is the exact same level which corresponds to, one second, yeah, it corresponds to the 0.5 levels. So this was the necessary pullback that was required to start a new trend, and it failed, and we continuously fell from there. And I also had a small stop loss taken out when I thought this is just a retest of the previous channel, but it actually did break down. Now, all that jazz aside, whatever is happening right now, what I predict the markets to do on a daily level right now is, right, so very rarely this happens that any index or stock or any asset class for that matter actually comes close to its 400 DMA. I have a strong conviction over this being a bullish reversal pattern. So even if we happen to slide down from here, and if at all we are even going to fall 1,000 points more, I would definitely want a little bit of retracement, which could potentially come from the 16,920 levels. Yeah, somewhere around 16,900. But in retrospect, when you look at the bigger picture, I think it will not be surprising if the markets, one second, let me get rid of this. Yeah, if at all you can imagine this, right? Look at this. This is very interesting. I was going through this. Imagine this being the left shoulder, right? And this is a retest. And then we do happen to bounce from here and fail around the same levels. Then yes, this could be a really good head and shoulder breakdown, and we would be positionally short for the longest time ever. But that's not happened yet. So let's just focus on what's happening right now, right? So what's next? So eventually I see markets sliding down to 16,700 levels, somewhere around there. But that's on daily, so you can never predict whether it happens tomorrow or a month later or a week later. No one knows, right? But for now, what our trade plan could be if we happen to see it on a smaller time frame. Yeah. For example, after this fall, now see, it's interesting. I'll tell you what's interesting about tomorrow. Today, the US CPI data is supposed to be out, right? And it could lead to a one-sided move, which could be very surprising and shocking for anybody who's short in the markets right now, right? Because, for example, imagine that the data comes out good, and US markets, they've also been falling, so they also deserve a pullback right now. Imagine they start to bounce, right? And if they continue like the up move from here, and if the markets, right, if they open probably 150 points gap up, so everyone who's short in the market, whoever's long puts are going to be trapped, and they will want to exit their position. And that will lead to a short covering move, which will probably take us to on a smaller time frame. These levels, at least we could target the 50 moving average on a hourly time frame, right? Or this resistance or this support. So in any case, the markets do happen to gap up. That's going to be scary for everyone who's short in the market. Okay, now that's condition number one if we gap up. Now, there's other things though. Let's not be extremely bullish right now. Other things that could possibly happen is we open flat, and this zone, right? Let me just write it down so it makes it easier for you. This is clearly a no trading zone, right? Because it's so volatile, and if you look at India VIX, it's peaking every day. It's so high, and if you're an option buyer, especially like me, you, in just a volatility of probably 150 points, you will be losing a lot of your premium, right? You'll be stopped out even though your analysis was right. So from this zone of 16,970, roughly 17,000 to 17,180, 17,200, right? This 200 point range is really not tradable. Now, if you're a seller, you could definitely sell out of the money options and try to eat up the premium. But since I'm not a seller, I wouldn't recommend any of that activity. Now, that's one. And the third situation being, imagine that we open flat and we do happen to have an hourly closing, but hourly closing does take long. If we do happen to close below 16,950, right? If we happen to slide anywhere below today's low, right? If we happen to slide below, say, 16,990, 16,980, there's a slight bit of caution here because when you zoom out, you will see there was... 1 second, buddy. There was this level, right? This is an important support zone. So if we ever happen to go below 69.50, there is this long pending gap. It wasn't entirely filled, it was almost filled, but there's still a gap left. So one could trade the gap, and that gap would potentially fill really, really quickly, right? So if we happen to go below 16,980, you could build a really, really small, be very, very light on your position sizing because markets are too volatile, right? You could have a short position here, take some caution around here. And if we do happen to have a 15-minute candle closing below 16,960, you could definitely grab 80 points and book all your shorts here. I would book all my short positions, whether it's equity, whether it's any other thing that I'm trading right now in Indian markets. Around this level is where I would book all of my shorts because I would expect a pullback from here. And on the upside, you could also notice this trend line that's been going on. I've marked this, but I really don't give this a lot of importance. I will only look for a long trade now when markets... yeah, if at all markets close anywhere above 17,250, I will be interested in longs. Until then, I am not going to take any long trade. Maybe the sellers could sell some puts, but there's no long calls for now. It's very risky, right? So that is Nifty. Now let's check out Bank Nifty. Yeah, Bank Nifty is, it's something, right? So this is very indecisive. Now, from what I think, right, from what my analysis of the market is, this zone that you see, this zone, we did not have any daily closing below 39,800, right? We did not have a single closing below that. Now, this can be perceived in 2-3 ways, right? Today's candle could be perceived in 2-3 ways. One, being that whatever you see, the upper wick, whatever upside movement we saw today was just a retest of such an important support that's broken, which is now the next resistance. Probably it was that, right? And this, what we see, the rejection from here is just a support zone that was made on 17th of October. That was a very significant green candle. So there was supposed to be some kind of buying from that support zone, right? Now, again, the same prospect for tomorrow for Bank Nifty, considering the markets are opening gap up. Now, this is where the entire game changes for anybody who's short in the market, right? Imagine the markets open above 39, even if above today's high, right? Above, what's the high today? 39,760. Let's consider 39,800, right? If the markets open above 39,800, all of this, right? All of this becomes a bear trap. There are a lot of retailers who are short in the market now. And if this is a bear trap, if the market opens above today's high and continues to go upside, we will be definitely seeing 40,000 levels. And probably if we close above that, then we are going to a upside momentum, right? And that could take us another 1,000, 1,500 points up from here, but that's on a daily. Okay. That being said, on daily, it's obviously easier to analyze a daily chart because you can always have a vision. But now in intraday, when you can deal with the volatility, that's where we make the money, right? So let's have a setup for that. So if you come to a smaller time frame, right? If you come to a 15-minute time frame, it's a pretty simple setup. It's just like Nifty. So I will be mentioning this here as well for your ease. This is clearly a no trading zone. We will refrain from any kind of option buying trades in this zone, right? We're not going to do that. And okay, this is amazing. Now this aligns the 50 moving average. It aligns with the day high and the resistance, right? So it's a simple trade plan. If you open flat and we are trading between these zones, between 39,200 and 39,650, 700, we are not going to take any option buying trade. We are just going to wait it out, right? We are going to wait for a breakout or a breakdown on either side. Now, just like Nifty, if at all we slide below today's low, right? Below 39,150. There's a quick scalp you can get until 39,000 odd levels. It's a whole number, and you could see some support there, right? But with any 15-minute candle closing below 39,000, there's a pending gap, right? So Nifty and Bank Nifty have very synchronized movement right now and synchronized potential movements waiting, right? So this is the gap that we could trade in Bank Nifty. And that could be a big trade, and that could come really, really quick and easy, right? Below 39,000, any 15-minute candle closing, we are directly getting like around 400, 350, 400 points, right? That's a big, big target intraday. Now, if that doesn't work, what next? If we do happen to have a 15-minute candle closing or an opening directly above 39,700, we could definitely test 40,000 levels, and if the upside sustains, we could even touch the 200 moving average. That's 4,400, right? So that's almost 700 points left on the upside. So now with whatever trade setups look, the risk reward ratio would definitely prevail in the long side over the short side. So the risk reward is not favoring any put buyers or option buyers for shorting the market right now, because VIX is very high. Sellers are going to take advantage of that, and you could be getting stopped out even though your analysis was right. So be careful, be light on your position sizes. And if you do happen to like this analysis, kindly like it and share it with people who would be in need of this to help them with their trading tomorrow. And that's it from me now. And if at all you have any suggestions or you might need help with anything, I could definitely make videos and help you out. And all the best for tomorrow. Protect your capital like your life depends upon it, because it actually genuinely does, right? So all the best, do well, and let's keep in touch. Let's make money together. Bye, guys.